Strive Inc., trading under the ticker ASST, is currently trading near 80 cents, marking an intraday decline of more than 7%. At first glance, this move appears to be driven by dilution panic, but the underlying cause is far more complex and rooted in a major restructuring of the company's balance sheet. Most retail traders see a sharp red candle and assume the company is burning cash or issuing shares simply to survive. In reality, Strive is executing a strategic capital restructuring designed to eliminate a large convertible debt overhang that posed a serious future dilution risk to common shareholders. The company recently issued preferred shares, carrying a 12.25% fixed dividend. This move effectively replaces high-risk convertible debt with structured equity. While this can pressure the common stock in the short term, it significantly reduces the threat of forced conversions later in the year. Volume data tells an important story. Heavy trading activity between 79 and 81 cents suggests redistribution rather than pure capitulation. In many cases, this indicates retail panic selling, while larger market participants accumulate shares at lower prices. Short interest in ASST remains elevated at around 13% of the float, and borrow fees are still high. This shows that bearish pressure is active and that short sellers are attempting to push the stock toward lower psychological levels. On social media, frustration is growing as Bitcoin trades sideways or slightly higher, while ASST continues to decline. This has fueled claims of manipulation and predatory short selling. However, institutional ownership data suggests a different narrative, showing increased positioning rather than wholesale exits. Options market data further supports this view. The put-to-call ratio remains unusually low, which is statistically uncommon for a stock in a strong downtrend. This implies professional traders are not aggressively hedging for a collapse, but are instead using volatility-based strategies. Strive's business model has shifted dramatically. The company is no longer operating as a traditional asset manager. It is transitioning into a Bitcoin treasury-focused company built on three pillars: accumulating Bitcoin, increasing Bitcoin per share, and generating steady ETF fee income. Following the acquisition of Semler Scientific, Strive now holds more than 12,000 Bitcoin, placing it among the top publicly traded companies with digital asset exposure. Despite this, the company's market capitalization does not appear to fully reflect the value of these holdings. Historically, ST traded as high as the $13 range, but merger uncertainty and debt concerns steadily eroded investor confidence. The recent preferred offering was critical, as it prevented the company from having to liquidate Bitcoin holdings to service debt obligations. Another notable signal is recent insider buying. The CEO purchased a significant amount of common stock during the downturn, which is typically viewed as a sign of confidence in the company's long-term valuation. Looking ahead, ASST's trajectory will depend largely on the performance of Bitcoin and management's ability to sustain its dividend commitments without additional dilution. In the near term, 78 cents remains a key support level, while a move back above one would signal a meaningful shift in momentum. In summary, the drop toward 80 is painful, but not necessarily irrational. It reflects a market struggling to price a company undergoing a fundamental transformation. Strive is no longer simply an asset manager. It is a high-risk, high-conviction Bitcoin treasury play, and the volatility